Hi guys, thanks for tuning in to another episode of Nuggets News. Another huge week in crypto. Happy Father's Day to all you fathers out there. I certainly take the time to visit both my grandparents, who I'm very lucky to have in their mid-80s, and obviously my dad Gary and grandpa Harry here. A few of you on Facebook have said the apple doesn't fall far from the tree, and obviously thank you for those kind wishes. Those of you that follow us know that Gemma and I are having our first child, a little boy as well. So great news. It's been a pretty tough time behind the scenes lately, guys. It certainly has its moments. Putting yourself out there publicly, it was a testing time lately, and the amount of support we got from you guys was just overwhelming. And I think it's so important to take that time away from the screen and spend it with family and loved ones. I love bouncing ideas off my granddads. They're both in their mid-80s. One loves technology, one hates it as well. Alrighty, some videos we did this week. I'm going to touch on that super episode. We talk about the housing market, the stock market, self-managed super, the bail-in laws that were passed in Australia that a lot of people don't realise. So that interview is about so much more than your self-managed super, guys. Kyber network tutorial. Not many people realise you can now swap tokens and sell for stable coins or gold or other coins directly from your wallet using Kyber's new swap facility. So check that out. And does mining put a floor in the price of Bitcoin and other cryptocurrencies? Be sure to check that episode out as well, guys. On this day in history, so it was in 2015 when this great article was written by MIT here in the Tech Review about the looming problem for Bitcoin, that if it continued to get more popular, the transaction per second limit would lead to being full blocks. And how are they going to scale? So this debate happened for many years, and a lot of people don't realize this, and there's benefits to scaling on chain and just increasing the block size, but also has its limitations and its downfalls. And we know that there's many scaling solutions being worked on for Bitcoin, Ethereum, and all these other coins promising thousands or millions of transactions per second in their white papers, but we want to get this right, and the good coins are taking their time. I don't mind that. And we've seen some interesting news this week out of the Bitcoin Cash community. So you guys know I try to be unbiased. I own the Bitcoin Cash I got with that hard fork. I've got nothing against it. I'd love to have Roger Ver on the channel, but I'd love to have him on with Andreas and myself host that debate and, be a neutral party and really talk openly, without, throwing shit at each other and all this infighting we see on Twitter. This week, Ryan Charles, who's a respected member of the Bitcoin community since 2010 or 11, he's coming out and said Craig Wright, the Australian, is Satoshi. Now, personally, guys, I think Satoshi was probably a group of people. I don't know if Craig Wright was one of those or not. It's very interesting for this to be playing out. We see Craig Wright blocked Roger Ver on Twitter, and those two are basically the faces of Bitcoin Cash. So I hope they sort that out, guys. Jihan Wu's involved. It's interesting to watch all these different parties. Again, I'd love to have Roger on the channel if the Bitcoin Cash community can organize that, because there's so many sides to what's going on, and I just hate when everyone's putting each other down on Twitter. The free market will decide what's best and what protocol works the best, guys. So watch this play out, particularly our large Australian audiences. Craig Wright is really putting his foot down, I guess, and demanding a lot of respect, and it's not always Australian the way he's going about it. It's probably all I'll say. This time last year, we had the first unicorns to arrive. So they're $1 billion startup, guys, and companies like Amici that raised a few million, Qtum, they passed that $1 billion market cap. ICOs were really heating up this time last year. I'm sure a few of you were learning how to send in your Ethereum, and that's certainly changed from the old days where you could just send it into an address on a website to, get a bit of DGX or, whatever it was. Now we've got KYC, AML. We're talking about security tokens and sophisticated investors only. The landscape's changed so much in 12 months. We'll continue to keep you up to date, and a lot of questions are being asked about security tokens. So we want to get the guests that are in the know at the forefront on the channel to talk about all that as well. This is something that we're going to possibly see continue. So a coin that's pretty well known, Substratum, doing a second round ICO after 1 year. Now, I don't want to point the finger at them, and this title is a bit sensationalist, calling them a major scam. I'm going to stay out of the politics, but what we're going to see, if projects didn't sell their Ethereum and they raised near the top, have they lost 80 or 90% of their runway? Maybe Ethereum price bounces back. I think it will eventually, but these guys need to pay bills. And if you've got a project that's already doing another ICO after 1 year, get in there and, ask some questions, demand it of the team. And in the stock market world, we see capital raisings if there is something good. So, a gold mine might buy another mine if it's going to increase the total value of the company and they can mine it for the next 10 years. If ICOs are just raising more money because they didn't spend their first 10, 20, 50 million, well, I think we should be asking some really tough questions. And you can do that these days in Telegram or Twitter, guys. So again, nothing against Substratum. Again, I'll follow this story. Let's see how it develops. But it's interesting to see this, as we said, because a lot of ICOs, the majority are less than 1 year old. Banking system in Australia, charging dead people fees, guys. Every time we think they've hit a new low, they continue to surprise us. This week we saw them also raise rates out of step. So in Australia, the central bank, the RBA, haven't raised rates for a couple of years, but the banks have raised rates a couple of times out of cycle, but also for investors. So a lot of the housing market have been going up and up. Everyone's getting rich. The property boom. Everyone loves property in Australia. It's getting to the point where the banks have clamped down and the housing regulators to say you can't borrow so much money for investment-only properties, and all these people that are having interest-only loans are now having to roll over. So get to the point where you've got to pay the principal and the interest. And what we're seeing in these stats, even just in the last few months, have a look at the rejections. So banks saying you can't afford the principal and interest. Australia does have the highest rates of investment-only mortgage lending in the world, I believe, particularly in those hot property suburbs, capital cities. So let's see how this plays out. That's not to say that every property's going down. Tasmania's been a great performer. The average house price here 70% lower than Sydney. So investors, as everything, guys, there's always good and bad stocks, houses, coins, whatever it is. Be selective, but just this trend of property only ever going up. Let's see how this plays out. Again, I'll get some experts on the show to talk about it. This week, we're going to be talking a little bit about data and privacy on the channel. Google apparently secret deal, backdoor deal with MasterCard to track 70% of your purchases. We know they track our GPS location through our phones, all the keywords we type. Amazon are already charging the same product at a different price to two different customers depending on your spending habits. Now that gets pretty scary in the future if we start to think about healthcare, insurance, even trying to get a job. If they know everything about you and what you do, we live in that George Orwell 1984, that totalitarian world. So we're going to explore that topic more because I know that interests you, a lot of you guys. New Brighton Capital is the name of that company that we're pleased to be working with. Check that interview out. Mike is such a legend. He loves his crypto. He's also a trader and an investor in other markets. We love supporting people that are supporters of the crypto community, and we've been told that some quotes to set up a self-managed super are $10,000, $2,000. I think they had the cost down to in the hundreds of dollars, and we've been able to get a $100 discount for any of the subscribers to the channel, and an even bigger discount if you're thinking about joining our premium service, which is only $50 a month, guys. We've actually got an even bigger discount for you guys there. So great option. I know a lot of people have been asking us how do I put a small percentage of my super in maybe Bitcoin and leave it for 10 or 20 years, and that's now only a few clicks away. Into the stock market, NASDAQ surges, best since August 2017 in that dot-com bubble. Bonds, interest rates rising, people moving money back to the US, which is so interesting to see when a lot of people thought emerging markets would be the best performers. They've borrowed a lot of debt, obviously priced in US dollars, and that's starting to hurt them. So the more the US dollar goes up, you've borrowed money in that currency. If it moves 30%, you owe them the interest and another 30% effectively. So it's pretty crazy to see how this works. Countries will do silly things, try to print their way out of it. We see governments, the ECB have come together. They're trying to suppress the rate on Italian bonds to as good as, a German bond or whatever that is, artificially manipulating and tinking it. And when you're pushing on one lever for too long, we don't know what happens on the other side when it tries to unwind. So we're going to see things in the bond market. We're going to see this. We're already seeing it in currencies. It's not just one or two now. It's some big countries, not fringe little countries you've never heard of. It's these big ones that are having hyperinflation. And that is only going to lead to more use of hard currency, whether that's gold, whether that's Bitcoin. We're seeing it already. So look how much the US is, diverging away from those emerging markets there. And we can use things like Google Trends. Obviously, we see a big run up in price there. Whether or not that's bottomed out, I'll let you be the judge and have a play around with that. But we're so focused on China, Korea. Is there an ETF in the US? Have a look at the countries that are searching for Bitcoin, guys. Indonesia, Brazil, Nigeria and Africa, and India I've spoken about so many times. These emerging middle classes out of India and China. You're not going to see anything like it if they adopt Bitcoin, even just to a small percent of the population. Colombia there as well. They've been in the news this week. I'll talk about that a little bit. Guys, you can head over to CoinDance and check this out. The volumes on local Bitcoin. So a lot of you will have used this before. Last week or a couple of weeks ago, we interviewed Bitcoin Babe, who's Australia's #1 trader for peer-to-peer through local Bitcoins. Now, we see the peak along with prices in December. It drops off. And we see countries like Australia where a lot of the Bitcoin is speculative investment versus somewhere like Argentina that's experiencing inflation, hyperinflation, and it's at record highs. So this is the message that I love trying to get across. Forget about an ETF. I don't really care. It's going to cause noise in the short term. What is going to drive Bitcoin in the long term is adoption, awareness, people using it, central banks continuing to do this one by one, countries going down that path where it becomes paper money, all it really is. And this is a perfect example of real people in the real world using Bitcoin. So great work. There's more of these locals coming as well. So local Ethereum, Ether. We're going to get all these on the channel, guys. And again, I love being at the coalface and seeing this play out. Just a quick little article here to get you thinking. So we've got all this exciting technology. Have you ever thought about the time you waste commuting to work? These are just stats out of the US, but this is all going to change. So automation, okay. Anything that makes it more efficient, cryptocurrencies, blockchains, saving time. Have a think about how much time is wasted. Will you work from home in the future? Will a robot take your job? Be interested in this technology and keep up to date with it. That might be the thing that gets you your next occupation or your side job with a bit of other income. You've got to keep up to date with this stuff, guys, because the future is going to look very different. IOTA this week, more good news. Expecting to launch that digital car pass as soon as Q1 next year. A lot of people thinking that all these projects are 5 years off until we're using this in our everyday lives. I think we're going to be surprised in the medium term. We got too far ahead of ourselves short term with prices. IOTA have added a lot of good team members as well this week, and it's been one of the best performers in the charts as well. Amisigo, you guys know I'm a huge fan. All these other white papers claiming thousands, millions transactions per second. People often forget that Ethereum's goal has always been billions of transactions per second, eventually with scaling solutions like Plasma. So side chains, we've got Raiden network, sharding, all these things, a year or two away, but Plasma is probably one of the scaling solutions that is a lot closer than what people think. So great to see there. Google Cloud Platform, you can now have a play around with Ethereum with that big query product that they offer. This is just putting it under the nose of, smart young minds, household names like Google. So again, it's always great to see. If you've been following this, you know that people like Joe Lubin have been saying Ethereum is going to have futures this year. And a lot of people a bit surprised by that, but we're starting to see more talk of it now. So Bitcoin had a huge run up leading into that speculation. Whether or not that was entirely due to futures and Bitcoin going to Wall Street or not, I think it gives it legitimacy. It helps maybe with regulation and ETFs and so on, but it doesn't actually encourage investment in directly Bitcoin or Ethereum. We know that these vehicles just track the price. We want the funds like backed that have a one-to-one backing of Bitcoin. We don't want derivatives. We don't want fractional reserves. We want one coin for one coin. We don't want it to end up like the gold and silver market with all these futures paper contracts I tweeted about during the week. The entire annual mine production of silver was, traded in one day. And that's just crazy that we're letting guys in suits at keyboards determine the price of real things produced by real people. So we want to keep this movement decentralized. Ethereum core devs delaying that difficulty bomb. So you know that I always try to give unbiased information. Competing coins, whether it's EOS, Cardano, I've always been a fan of all of them. Give them a chance to succeed. Let's see what they do. Now, all of them are behind schedule. Look at EOS launching. Look at Cardano. Ethereum's had to push back again. This is why I hate infighting and some of the stuff that gets said on Twitter and Reddit. We should be supporting each other, and the free market will determine what's best. Now, delaying the difficulty bomb, where it gets exponentially difficult to mine and we move to proof of stake, they're reducing that block reward from 3 to 2. So again, that's good on the basics of supply and demand. Some people are saying this is centralized. Vitalik's not at this meeting. The community still has to hard fork, and all the nodes agree to do this. So that's how Ethereum Classic came about, when a very small section of the community didn't agree to do something. So the chances of having 3 Ethereum's pretty small, but I'm never going to be surprised and say never again after Ethereum Classic, when we basically had consensus with the vast majority of the community. So who knows if there's another hard fork, but the last couple of hard forks obviously haven't been contentious in Ethereum. Lloyd's getting on board. Insurance and custody has been one of the big things we're waiting on. And having someone that's been in this insurance marketplace for hundreds of years, again, just more legitimacy, more awareness. The good news articles continue to flow. Square getting that patent for cryptocurrency payments, a huge household company in the US and around the world. Yahoo adding trading of Bitcoin, Ethereum, and Litecoin. You've heard me call them the big 3. Yes, Litecoin isn't number 3 by market cap, but it's the oldest coin without a hard fork. It's a currency, so a lot of big businesses like Yahoo, they're not fearful that it's a security. So it's a true decentralized cryptocurrency of sorts, and that's why I guess it gets referred to as the big 3. Japanese giant Rakuten acquiring a Bitcoin exchange. Japan's one of those countries where they love crypto, just like South Korea, China. They love their technology. More and more people want to get in this space, guys. Adapt or get left behind. I've said it so many times that the countries that over-regulate, overtax, it's going to be their own downfall. And we've seen this week, just like we saw with those Google searches, the Colombia president say, come here, we want these smart young minds. We want these startups that have millions of dollars. We'll waive your taxes. We've already seen the exchanges move to Malta. I've got friends in Australia that wanted to start exchanges or security token, related products or businesses, and they have to move to Malta. They're just leaving Australia. So this will all play out in the long run, guys. Those countries will suffer. The countries, the emerging markets that we saw, they want that money, guys. So I can't wait to see how this plays out. It's a shame that some of the Western countries are making it so hard for startups and cryptocurrency. Pomp, a great guy, a legend. We want to have him back on the podcast this week. Partnered with Bitwise to create that institutional grade investment fund. So they're not having any tokens that they believe to be centralized. So you can check out digitalassetindexfund.com there for more information. But the race is on, guys. More and more products. Everyone wants to get into this fund, give their clients exposure. This is something that I posted for members this week. So a coin that's currently down 98% to 12 cents. So it was over $6. It hasn't changed. Its fundamentals haven't changed. Hasn't had any bad news. I covered it on the channel. And that's Wabi that I spoke about on the 17th of August at 12 cents. We'll check that out in technicals in just a second. But last week, Bitcoin was trading at 6,600, and we were eyeing off the 31st of August as another key date when we got this cycle bracket pushing up. So sure enough, we were able to continue higher, have this little pullback, and then push up on the 31st. So cycle brackets doing their thing there. We've approached this resistance level that we said was pretty likely as 7,200 as we form a weekly equilibrium. But last week I spoke about ripping the band-aid off in terms of all those ETFs getting rejected. That's probably a good thing because the markets are irrational, and rejecting them one by one could have caused a lot of FUD and headlines. So obviously we're mindful of the Van Eck ETF that everyone's got their eyes on now. Whether or not markets panic if that gets rejected or delayed, who knows? But that's on September 30. We've had a great run. Whether or not we have a little pullback here, we've got 200-day moving average. This was that level that we're eyeing off as the first resistance here. So again, we drew this zone up here that proved to be very tough resistance. There's going to be a bit of work to do here, guys. Maybe a bit of a pullback before another leg higher, and we're not really expecting a big downturn until September 17th. There's that key date there. So whispers of an ETF, whispers of them needing clean coins only to make sure they're not involved with fraud or anything like that. So that would require an ETF buying all the supply off the miners, which is a good thing as well. So we know that Backed is on the way. That's come out and said they don't want any leverage products. It's going to be one-to-one backed. So look, there's plenty of good things on the horizon. Let's see how markets react to the news headlights in the short term. But those OGs throwing in the towel, a lot of really negative sentiment on Twitter. Who knows, guys? A lot of people calling for one more leg down still. That's what creates a market. Let's check out Ethereum. Last week trading at around 260. Look, it hasn't had as big a run. We know those stories of ICOs having to sell. We're more mindful of the Ethereum Bitcoin pair. So let's check that out. We spoke about this sometimes being a leading indicator for alt season. Now, this is a really bullish candle here, a hammer. Buyers stepping in on that wick. We see volume. Look, this is only one day here from that sell-off. So whether or not we trend lower, let's see. But I guess the exciting thing for me is these other coins. So I'm not too fussed about Litecoin, tracking Bitcoin. Not huge volume or anything too exciting there, guys. You can draw this trend line a couple of ways. So it's more these altcoins that I'm excited about. Let's see a Mesa Go having a decent run off the lows. IOTA with some decent news this week. We've had some huge movers. I spoke about VeChain. I've spoken about Walton Chain. Something like Wabi that I covered there, guys, at 12 cents. If you have money on the sidelines, you've been patient. These huge gains, 100%, even 400%, I think, for Nano the other week. They're those signs of risk to reward, and we might not revisit those lows. And that, to me, is exciting because if the projects with strong fundamentals are moving independently and they're outpacing the market, I'd love to see these bad projects sell off and money flow into good ones. The people that do their research get rewarded rather than, everything going up. Now, I'm going to make a video about why everything goes up, why there's a lot of correlation. But for the time being, pretty exciting to see some coins with strong fundamentals being amongst the best movers and some of the average coins really just lagging. So let's see that plays out. It's great to see strength on a weekend. Who would have thought that we'd be up this far after all those ETFs got rejected? Finally, guys, over 5,000 people get our free newsletter every week. We keep you up to date with all the latest articles and what's been going on in the space. A lot of questions about our premium service, guys. Feel free to register, $50 a month for all the crypto education and chat about the good coins, a bit of trading. We're going to put out a video about exactly what's involved and a lot of details when we launch that new website in the future. So thanks for tuning in, guys, supporting the channel. As always, share these videos around, subscribe if you haven't already, and we'll talk to you again soon. Cheers.